All right, but we do have an interesting development. Well, it's kind of been manifesting the last few weeks, and I think it's definitely worthy enough of discussion and warning. Hold on, I'll post these. Oh, you got to bear with me today. I feel like I smoked crack or something. All right, here we go. Did I post the thing here? Let me see. Nope. Hold on. I didn't press send. Wrong mouse. There we go. All right. I'm ready. I think I'm ready now. Everything's muted. All right. So let's get everybody up to date here. Just in case anybody wasn't around last week or anybody's new. Let's get to one chart, make it nice and easy. Okay. What? Jesus. All right. So if you guys recall, okay, we've had some fun over the last, since the beginning of the year, at least since the beginning of the year. It's been a lot of fun in individual names, especially. But since the October lows, there's been enough action in individual names to keep us entertained and make a little bit of money. And that's more, especially compared to what we've dealt with prior in this bear market. We have no complaints with how things have transpired off the October lows. But that being said, if you recall last week, the problem we were facing, okay, the squeeze and the rally went from group to group to sector to sector. Every egg has hatched. I think that was the analogy, right? We were talking about every egg has hatched, meaning that everything we were looking at, any setup with the possibility of a trade being unwound or a squeeze in effect played out, right? We went with the last being the NASDAQ high growth and spec names, which have been significantly shorted throughout the bear market. What's interesting is there's been a real risk appetite for speculative stuff out there again, and it's no coincidence it lines up with a little bump up in liquidity, right? Whoever, I don't know how anybody can say that liquidity doesn't play a part in speculative assets, especially in the market. We see it every damn time, but it can't be a coincidence that we were seeing that liquidity was going to be a lot more favorable, right, coming into the beginning of this year, especially of late. There's been significant drain in liquidity, tightening, and everything else from central banks throughout this bear market. We had a window where liquidity was going to be favorable, and honestly, I didn't just assume it would pour in and translate into the risk appetite we're seeing now. Okay, I just thought possibly the mechanical selling, right? What we were talking about, the Fed rigging the game, that process would be over. I didn't just assume that they find AI stocks and we go through crypto 2.0 again, but it can't be a coincidence that these things line up. All right. So the problem we faced is that all the good things that we have been talking about a bear market rally and a bullish phase for us to play off of. Okay. We were approaching a point where there's just not much left. Okay, there wasn't, the risk reward on a lot of things just weren't favorable anymore, and we either needed to see buyers find something new, okay, meaning rotate into another subsector or pocket of the market that we're not aware of. Okay, and AI is an example of that. Okay. So something to that effect, or we the prudent thing to do is probably sit on our hands, relax, and be extremely selective and a lot more tactical, meaning a lot quicker stop losses and gains until things shake out a bit. Okay. Now that was last week. And another thing, not to get too technical with you guys, but a lot of you guys know I use these the mark indicator TD sequential. Again, just more for not buy and sell signals, but just a quick synopsis of when things get overheated or overdone in either direction. And you look across the board, okay, from individual names to major indexes, we're running into upside niners. Again, in simple English, if you don't know what these are, they're just exhaustion signals, okay? Meaning this is a spot where bulls, or if it's to the downside, bears, should get tired, right? We usually see them get tired, okay? And, again, common sense, if that's what the takeaway is, you probably wouldn't be prudent just to get long here, right? Wait to see how things shake out, maybe a little breather, or maybe it's something more violent, but allow things to shake out and see how strong the buying or selling really is. Okay. So we were approaching that point in a lot of things. I mean, you can look here, the Russell, right? Everything. Boom. The NASDAQ, which actually overshot. Hamad, you got to take your earplugs out. NQ, yeah, here, see? So well, you had the Apple earnings. I think it was Apple earnings. Somebody's earnings came out and they were a positive response, so it overshot, but then boom, you go into a little breather here. Meta, this was Meta? Maybe it was Meta, I'm not sure. Well, anyway, NASDAQ related names and, went higher the next day. A lot of people thought just take off from here, but again, you just want to this is the way I look at the game anyhow. Everything we should look at as risk reward, plain and simple. You know what I mean? There's no other way to look at it. Okay, and again, if all goes down, people chase certainty in this game. They want to win every trade, and when you realize you're not, you're going to look at everything on a risk reward basis, right? And you got to be realistic about it. Okay, if the reward, especially on a short-term trade, is not worth the risk of getting caught in some downdraft or consolidation, those are the things we have to pass on, obviously, right? So again, we just want to see how things shake out here. So point I'm making here is coming into the week, just not the ideal setup, okay? Unless we find something new. And what do I mean by something new, right? Something that doesn't look like this, okay? Something that does not look like this. And there hasn't been. So the last few days, we've seen some really selective call buying out there. And I'm not gonna lie, some of the bull betting as far as the flow is concerned is not bad. There's some decent orders out there. But a lot of the names, it's repeat activity or names. I'll give you an example. Some of the names today, you had, MCHP, which again looks constructive and bullish. But this is not where I want to come in when big picture wise, you know what I mean? Things look a little dicey, right? So that's been my problem. That's been my problem with some of the flow out there. Again, the orders haven't been that bad. It's just, as we like to say, the spots, right? We want to come in here, right? We want to come in here, right? We don't want to come in all the way up here. And even if there's a little bit of upside, then we get caught in some lengthy consolidation or pullback. All right. So that's been the problem. So we were going to see a couple things. We were going to see one or two things shake out over this week or the next coming week. Okay. Either the market would stay firm, okay, and people would become more bullish and possibly create some offside positioning, okay, which the takeaway would be bearish there, or we would get a healthy wash, right, and kind of reset everything, okay? Because if we get that healthy wash, even the stuff that I'm saying is too hot, off a pullback looks a lot better, right? You could play even short-term snapback, bounce plays. We just don't want to. We don't want to print the highs and then get caught in a yank, right? So what's happened now, and what's interesting, and again, this has developed over the last, throughout this rally. Here are some of the things we look at continuously on this webinar, and again, Steamroom members on a day-to-day basis, right? Okay. Where's the other one? Here it is. We talk about the professional side, right? They're the ones who've been most bullish throughout this rally, okay? They are the ones, remember talking about the hedge fund crowd, the systematic fund crowd, right? They're the ones who down here into the lows of October were aggressively bearish. Okay, and once the tide turned, they have to start to unwind those positions, right? And this is big picture wise in the market, even subsector wise, right? We talked about how the semis were the most heavily shorted part of tech, right? Tech as a whole was where a lot of these professional funds and systematic funds were living throughout this bear market in NASDAQ tech and growth. Semis was their bread and butter. Okay, that's where they made their living throughout this bear market. And so you had an aggressive short position, even up until recently, they just started covering that, right? And they were crowding into, if you remember, we were talking about anything tied to overseas, in a sense, right? That weak dollar trade. All right, so we started to see some of this unwind, as you can see. Okay, I think when we spoke, it didn't even start to unwind yet. Now it's starting to unwind the sell side. Okay, but here's what the crowd looks like now. Because think about this, right? They've been aggressively covering their short positions. Okay, as a whole throughout this whole move. And you could see here, right, since the start of 2012, the fourth largest short covering episode in only 4 weeks. Okay, so aggressive short covering recently. All right, and what that has led to a couple things here now that can potentially be, I don't want to say a serious problem. Serious is, gets kind of spooky, but could be an issue. Okay, could be an issue if it needs to be unwound. Okay, and we'll talk about what I mean by issue in a minute, but let's look at what I'm referring to here, right? So these are the CTAs, okay? And think of them again as systematic funds. There are no emotion involved in it. They do things systematically. They follow trends in a sense. That's what they do, okay? And a lot of times their positions get to an extreme, and when that trend starts to go the other way, you can really see them have an effect on markets, especially illiquid markets, right? And you ask a lot of pros or people like myself who've been in this game a long time, they would tell you positioning is almost everything in bear markets, everything, right? A lot of times these crashes and these flash crashes, they happen off positioning. So it's always prudent to know, be aware of the positioning backdrop out there. Okay, it doesn't have to be actionable on a day-to-day basis. I think that's what a lot of, especially newer traders, get disappointed with, right? They want levels every day. They want buy-sell signals every day. They're out of their minds. You know what I mean? They're nuts. But you have to be aware of where positioning is at, in my opinion, at all times, especially at extremes. if anything, especially at extremes. Okay, so we have a situation now where these systematic funds, as Goldman puts it here, are running out of bullets. Okay, and these are global funds now. Okay, because a lot of the buying that has taken place wasn't really in the U.S. market. Okay, or even if it was in names that had, pretty significant overseas exposure because of the weak dollar, because of a number of factors that we discussed over several webinars. The money was going there. Okay, and now you can see here, by the way, Goldman's wording it here, that there was a huge amount of buying. We estimated they purchased 120 billion worth of stocks globally over the past month across 21 indices. Okay, so broad buying. This essentially ranks in the 100th percentile for length across the board. They are full and will remove a significant buyer for the foreseeable future. So in other words, the main driver, okay, or a significant part of the main driver of this bear market rally or bullish phase, whatever you want to label it, is tapped out. Okay, tapped out. Now, tapped out doesn't mean the market crashes. Okay, tapped out means that a lot of that chase buying that you see that we saw into green, right? Straight up, and they chased, and it looks like someone's getting squeezed and caught. The likelihood is that is gone now. And a good example, if you ask me, today, we kind of saw a little bit of that. The market was strong, it was hanging in there, everything looked great in the morning, and then it just, buyers dried up, and you got bears sniff that out, they start selling and push the indexes, lower into the red. So we got a good example of that today, in a sense of what happened. Okay, so the buyer, a big portion of the buyers tapped out. Okay, I think the more important thing to pay attention to be aware of, is if something happens, and this is the edge, the main edge from positioning. Okay, it's not always actionable as soon as you notice it. Okay, the match has to be lit, right? In a sense. Okay, if everybody is short or nobody is long and something bad happens, okay, there's a good possibility that initial sell-off off that negative news, okay, won't find the momentum to the downside, won't find that follow through to the downside. Why? Because nobody is long to sell anything, right? And if anything, that money on the sidelines would step in and possibly come in and buy, right? So the opposite would be the case if, as Goldman's putting it, right, their tank is full, right? If they have full exposure globally across the board, okay, and there is some sort of catalyst or trigger, okay, we know of one being the CPI next week, okay, and here's the thing, this is something we talk about constantly. It doesn't have to be a known catalyst. It's the unknown catalyst in a bear market that bites you in the ass. All right. So example, we've talked about 9/11 in the 2001 bear market, right? We brought that up numerous times. If a 9/11 event happens when positioning is full, you got a debacle on your hands. You understand? Because you have a lot of trapped longs, especially systematics that can't, they have no say in what they do. As levels breach to the downside, right? And as VIX breach level to the upside, they need to sell. There's no thought process in it. Okay. So there are a couple of takeaways, and here the beauty of Goldman, they just, they do an amazing job of breaking it down to levels and weeks of what it means, how much buying and selling in an up-down tape flat tape. But again, the basic takeaway is what, while we were watching this is kind of what we were getting concerned about. Okay. And I don't want to necessarily translate this into a crash, but it could possibly be translated into a decent washout and set up an entry that we're kind of looking for here. I think that might be the more important takeaway. And we'll talk about that in a second. Okay. So anyway, CTAs are full. And we probably, at least we probably see a lack of buying, if anything. Okay. Without any catalyst. Then, oh, here, let me show you some charts to show you what they look like. Okay. And these, again, these are global funds, not just our market, right? It's globally what's been going on. And here you can see here, right? So this is 120 billion demand in global equities, the black line, and they got SPX rolling 1 month return behind it. All right. So you can see how highly correlated they are. Here's what it looks like in another chart. Okay, as far as a measure on their positioning, and they've been more long in the past, all right, but they are still significantly long here in a bear market. Okay, a lot of this long exposure is not in the bear market. All right, and then on the other side now, okay, of the professional crowd that we follow are, oh, come on, I posted the wrong chart. I can never do a thing right. This is not updated. Let me put an updated chart. Hold on. Want to see order flow being discussed in real time? I'm on a live broadcast during market hours every day where I call out the most actionable orders and point out important sentiment and positioning updates throughout the day. Go to wallstreetjesus.com/the Steamroom to apply for a 30-day trial and check out our community of traders. We look at it constantly every week on here on this webinar. And then it's good, actually, you could see where they were at, okay? You know, they were floating, they just got over the zero mark, slightly net long. All right, and now you can see the updated look here. They've added a bit, right? So you can see a little extension here now. Oh. Right. So again, not as long as they are when they're chasing in bull markets. Okay. But as you can see throughout this bear market, okay, this is by far the longest exposure, you know, the most exposure they've had on the long side. All right. Example here, a couple of the other prior bear market rallies. And then when they needed to add shorts back on, when they felt they were underexposed to the downside, could weigh on markets. So the takeaway from this is simple, okay? If there is, plain and simple, ready? CPI comes in hotter than expected, you got an issue. You likely have an issue, okay? Because you'll have likely some selling, right? Unexpected off the hot CPI. You'll have CTAs that are full exposure and needing to trim that exposure. That's going to feed into the selling. And then you have hedge funds that are long, okay, and forced long based on Goldilocks and soft landing or no landing or whatever rhetoric is out there right now. Okay. To now, maybe the Fed has to break something if we have a hot CPI, right? So we start to see this, especially with some of the run in some of the growthier stuff out there. Okay. So that's the main risk. Okay, that's the main risk, especially if you get a hot CPI like that. That's what could put the kibosh on everything we're seeing, is that inflation flaring up. right? We could all agree on that. I think that's honestly, that's the solely the risk out there. I really do think like that's the main risk out there. I think the market doesn't give a rat's ass, excuse my French, about anything else. But if inflation flares up and the Fed, they're going to price in another round of Fed hikes and tightening, I think it could be a problem. Okay. Here's how I'm looking at it, right? Okay. With a trigger or not, okay, with a hot CPI or not, okay. There's been a lot of speculative fever going on out there. You guys know, right? From Bitcoin, all the other stuff with liquidity. I think once the liquidity situation dries up a little bit, slows up a little bit, I think the markets, especially the more speculative stuff, is going to turn sour and get a lot choppier out there anyway. Okay, what I'm hoping for and what I'm looking for, if we could get off the positioning we just looked at, that would be a beautiful thing. Just that. Okay. And why just that? Because I think just that is a perfect shakeout, right? Like, think about the sentiment out there of negative news. If, you know, the S&P sheds 200 points quickly, right? You'll have everybody and their mother expecting the big crash to finally come. And in reality, okay, and this is where we got to keep reminding ourselves of where we're at, okay? In all likelihood, unless we really start to see the stuff we look at change, right? We just have to assume that we are in something like this, right? Okay. And right now, the crowd, okay, is either trying to catch or bet on, right? Trying to ride or bet on the start of a new bull market and breakout, or the crash. There is no in between. There is no in between. The pain trade, right, that I think nobody's talking about is exactly this. Is exactly this. You know, the economy is not blowing up. Inflation, right, is not heating up. You got every Uber bear and every Uber bull pulling their hair out of their head on a day-to-day basis. Okay? And, you know, until it starts to line up one way or another, on one side or another, I think this can continue. And the backdrop is there for it, meaning this. If the recession's nowhere in sight, okay, and inflation is just hanging out, even if it's not drastically cooling off, right? That's what we were talking about. You had that sweet spot of a setup. Again, sweet spot is a little misleading. I'm not talking about the markets and the indexes. I'm talking about finding alpha and opportunities in the individual names, like exactly like we've been seeing. Exactly like we've been seeing. Okay. I just think the market needs a little punch in the mouth here to shake some of those Johnny come lately players out. All right. Everybody already bared up Carl Icahn the put seller you guys were talking about yesterday. What put seller would be bullish, wouldn't it? Oh, Carl Icahn bought puts. Oh, that makes more sense. Yeah, very possible. You know what I mean? Very possible. All those guys, listen, Pepper had puts. You know what I mean? Mike Wilson has puts. Kalanovich has puts. Everybody has puts. One of these guys are going to be right, right? You buy it, somebody's buying puts here, somebody's buying puts here, somebody's buying puts here, somebody's buying puts here, one of these guys are going to be right in a bear market. I guarantee it. I can promise you. One of them are. One of them are. But again, maybe listen, I'm not saying there could be a short trade out of this. There could be. My personal opinion, though, without a catalyst, I think it gets a little tricky. I think they make you earn it without a catalyst. I don't know. I would rather a sell-off before inflation, like I told you, like this. Okay. I don't know if they can pull that off. I hope they can. I really don't know. I hope they can. I think they're going to make, if you want to cash a decent ticket on the downside here, they're going to make you hold through the CPI. You don't think so? You guys don't think that? Right? Don't you think they're gonna force anybody to try to cash a decent ticket here to hold through CPI? Yeah, I'm that could obviously be wrong, but that's just my thought here. And then you're taking on a whole lot of risk, right? You're taking on a whole lot of risk into the CPI. That's next week, by the way. Yeah, that's next week. So I think, listen, I think that's the tricky part about trying to catch a worthwhile downside ticket here. Okay. I mean, it depends what you're looking for. Like today, for some of you, today was good enough, but the majority of the people out there, they're looking for a lot more than that. You know what I mean? They're looking for a bigger pull than that, or they're going to be holding for a bigger pull than that. And I think it's like, for example, I'll give you an example of what I mean by that. Like tomorrow, you can't see this. We sell off and get every bear jumping out of their shoes, and then all of a sudden, boop, market goes green. You can't, right? Would that be so far-fetched and uncommon in what we've been seeing? So think about it. You're going to have to sit through that. So you're going to have to sit through having puts that you're going to be green on, and then now all of a sudden you're taking a hickey on in the half a day. It's not easy, guys. It's not easy. Yeah, it's not easy. There are signs out there that there's going to be a yank. I agree with that. With VVIX, I agree 100%. And again, this is you guys, especially some of you guys have been talking about this for a few days now. The signs have been there. This thing, you see this red here? I mean, this is going to blind you. The signs are all there that we could use some sort of breather. I mean, I think that's the obvious. Might be a little too obvious. That's the problem. It might be a little too obvious. It is very obvious. Bitcoin, I think, is it, and you guys know I'm no Bitcoin fan. I think it's an interesting watch here in regards to liquidity. Again, I don't think it's a coincidence that Bitcoin all of a sudden broke out of its shell and had a half-decent squeeze here alongside all the Bitcoin names and every piece of spec out there, okay, when the liquidity backdrop improved, right? You guys saw the charts we looked at Sunday. The liquidity charts, they were ridiculous. Very surprising. Nobody was expecting it. Well, some people were talking about it. I didn't expect it. So, if this thing starts to cool off, regardless of what the equities are doing, that could be telling us the liquidity backdrop is getting worse, right? Is getting worse, right? The Kathy name, she's back, right? So listen, I wanted the hyperbole out there. That's where everybody flocks to. That's who gets the most amount of likes and followers on Twitter. I get it. Okay. What I'm telling you, more than not, in bear markets, in any market, okay, that hyperbole is going to do nothing but bring you agony, pain, and cost you money. the majority of the process is not that sexy ending that people are portraying. And you realize, like, the most popular players on social media are into the hyperbole on one end or the other, right? All the time. Those are the most popular, like, that's where everybody flocks to. The tweet out there who sounds certain about the outcome, and the outcome's going to be big. And we're all going to cash a ticket, and we're all going to be slapping five, all 300,000 of us, right? All 300,000 of us are going to catch the biggest crash of our lifetime, and we're all going to buy the absolute lows of our generation. Every single one of us, me and all my followers. So, you know, that's what sells, and that's what gets people excited, and good for them. You know, they're going to learn one way or the other. You know, they're going to learn the hard way, more than one. They're going to learn the hard way. But my point being is that, you know, the majority of the time, it's not a sexy story. You know what I mean? It's a grind. It's a grind. And the grind, as you guys have been seeing, is not that bad, this new grind, right? The first 3 quarters of this bear market have been dreadful, okay? But since those October lows, and since we've seen that new dynamic of parts of the underbelly out there diverging from the indexes, this market's been fun. This market's been fun, right? Yeah, there's been opportunities to make money, right? Still gonna run into some losers. You still got to manage your risk properly, right? You always got to pay. I mean, as corny as it is, that's the obvious, but keeps us entertained, and, you know, the majority of us have found a way to make a little bit of money in the meantime. Okay, but it's no, I sold the bulk soon. When did I sell it? Early in the week. Today's what, Thursday? A couple days ago. Monday I sold it. Holy shit, that many days ago? Yeah, I got a little lucky there, Cash, you know? I got lucky there. But it's all right. You know, I'm sure I'll be complaining of being unlucky sooner than later. Right? But see, like, this is what I mean, like, what I was referring to earlier about, you know, hopefully sweepers would find another pocket, you know, something that didn't move yet, right? That we can possibly get in for a trade instead of, you know, looking to buy over here, right? That's not what we want to do. So things are setting up, and I think if we do get that a little bit of a yank, that's all we need, a little bit of a yank. I think there'll be a lot of things set up. I really do. And here's the thing, okay? And again, we can't predict it. We can only analyze it and react, right? We talked about that. We want to react in this type of bear market, okay? It's impossible to anticipate. Think about, you have the smartest minds out there on the street on 2 opposite sides of the trade. You know what I mean? Nobody has a clue of how this is going to shake out. Okay, some people get hot, they make a couple great calls, but, you know, they're more than likely they're gonna time something wrong. I can promise you that. It's not easy. There's no Houdini in this game. No such thing. All right. So we don't want to try and be better at that than they are. It's a fool's game. Okay, we have the luxury, we don't need to do that. We can react, right? If we see a certain setup and we see it's playing out, we can react to it. If we don't see it's playing out, we don't have to make a call to somebody and stick by it. You know what I mean? And that's the way we got to treat it. That's the way we got to treat it. Okay. So, but right now, as it looks to the stuff we look at, okay, right now it looks like you have an economy that, again, has been stronger than everybody has anticipated, or what the Fed has done has not had its full effect on the economy as early as people anticipated, including me. Whatever it is, whatever reason, you got an economy holding up and actually seeing a little bump of late, guys, seeing a little bump. Okay, meaning improving of late. Okay, and you have inflation that's cooled off. Okay, if that narrative, or even more so, if the market still believes in that narrative, that's the better way to word it. Okay, the market still tells us that that narrative is in play. I think it's just more of the same of exactly of what we've been seeing. And playing the indexes are going to be extremely difficult outside of a quick trade, extremely difficult. The only time that something might be open up as far as a decent risk reward trade is at the extremes, right? That's it. That's it. You can make the argument for a risk reward trade, kind of like where, right, you're close to it on the short side or getting close to it now. Okay, but for some of us who are looking long only, right, the indexes are nowhere near where we would want them to pay attention to the indexes. Okay, but in the meantime, the beauty of it is, off any weakness, especially weakness that we see, we want to keep our eyes out for opportunities in individual names. Okay, as long as this narrative sticks, because if the market still continues to believe this narrative, you're going to see buyers show up in individual names off pullbacks. You're going to see it. Maybe different groups from time to time, okay, may come in stocks that you don't like, but they are going to park some money, some of that pile of cash that the pros have and been raising on the sidelines. They're going to look for things to buy, especially off pullbacks, if that narrative holds. Okay, because again, we're talking about what now? Think about it. Recession the end of 2022. Now you got Biden, the nut job, guaranteeing no recession for the next 2 years. Did you hear that? Did you hear him say that? He guaranteed no recession. You can't. Fame is right, you know. But even if like the market was pricing, and by the way, the July rate cuts got priced out. I don't know if you guys seen that. Look, let me go to my thing. It's quicker. Hold on. Oh, one more chart I wanted to show you here, right? Why we could use a little punch in the jaw. Okay, here's money going either into risky asset funds or safe asset funds, right? And you can see where they hide in bear markets. And then bing, you have risk on. Okay, so they could just use a nice little punch in the jaw, put them back in their place. Here is that NAAIM exposure. And this up here is the blue one. You can see, right? Creeping up. October was in the basement. Okay, you've had big moves out there. I mean, you don't need any of this to tell you that. You've had ridiculous moves out there. But this is what I wanted to show you guys. Here it is. Now, again, the market initially was pricing rate cuts for February, right? Then they moved them to July because the economy's stronger than expected. Then after that ridiculous job number last Friday, they've moved them out even more. Yep. Yeah, August, no meeting, exactly. Okay. So, again, whatever interpretation this is, either They think that the economy is going to significantly deteriorate because of what the Fed has been doing. Okay. And they're going to need to cut rates second half of the year or late this year, or inflation comes crashing down. And by September, the Fed can cut rates, which had opened up that can of worms at the last Fed meeting, which nobody thought was a possibility. You know, so this stuff, right, is what people are looking at. If you start to see these numbers go higher, that's going to weigh on equities. You know, this, in my opinion, not as much, you know, not that you won't have a little bit of weakness, but not, it won't affect, you won't have that Fed rigging the game type selling. But if these things start to get bumped up, then you get the Fed rigging process in effect. These are what they're pricing in for each Fed meeting. Is this percentages? That's a good question. No, I don't think it's percentages. These are yeah. Right? So this would be a quarter. Yeah. So this would be exactly a quarter. Right. Which is weird, right? That they do it like that. But so this is not even a full rate cut. You understand? Yeah. All this is not even a full rate cut yet. Yeah, it's weird how they do it that way. Weird. Right. These equal one, I guess, right? Is that what you're saying? Equal a quarter? Yeah. But you know, that's what ultimately will bring that Fed rigging process into the game. But you know what's nuts? Have you guys have seen this? How am I gonna? Oh, I can find it like this. Hold on. Like right now, I think that's the crazy part of this game. I've seen it. Things change so quickly. But look at like the stuff that would react if the economy was feeling some stress. See? Look at this. Right? So when you have the Fed rigging the game, right? That's the term we use so we understand exactly what it means. You have this. Okay? And that in S&P 500 terms means this. Okay? You can't overpower this. You can't. It's manipulation. Right? Yeah. Plain and simple, the Fed is not rigging the game. And you see, like Powell, you see, and it's kind of taking everybody by surprise because they were rigging the game and they're not doing it anymore. They're asking him about financial conditions, right? So they're pretty much asking him about this in a sense. And, you know, it's not even phasing him right now, okay? Because he knows if he needs to rig the game, he can create this. You understand? And that will create this. And right now, as we've been talking about on the last couple of webinars, right, we've been talking about the Fed, and people were calling for this. The Fed has taken the approach, okay, we did all this. We did this, okay, all that tightening. Let's take the foot off the brake and let the economy grab the wheel, okay? Let the fundamentals of the economy now dictate whether things are tightening up or not. Okay, because they're just as concerned about over tightening with inflation coming in the way it has, whether they're right or wrong. A lot of people think they're wrong for thinking this. Okay, but regardless, right now they're just as concerned about killing the economy as they are inflation. That's a big difference compared to where they were. Okay, where they were at was damn the economy, we have to kill inflation. If the economy goes into a recession, so be it. Inflation's worse, right? Right out of his mouth. Okay. That's not the case right now. No matter what they say, actions speak louder than words. That's not the case right now. A lot of people think they're wrong for doing that, because if inflation flares up again, you got a serious problem. A la 1970s, that's what happened, right? That's what Powell didn't want to happen. Okay. But for Powell, for whatever reason, right, at Jackson Hole, he's saying a different tune. For whatever reason, right now, he's just as concerned about the economy as he is inflation. You know what I think is? He sees, he thought it was a long shot. He sees the potential for a soft landing here. He sees inflation cool, coming in. Okay. He sees money supply. He sees all that stuff really falling off a cliff, right? Based on what the Fed has done already. And he's trying to have his cake and eat it too now. If the economy can, slow down, but not deteriorate, okay, and inflation comes down aggressively, there's your soft landing. But again, that's what it looks like right now. That's the problem, right? That's the problem with this stuff when the Fed tightens. It can look okay now. It can flare up in a month from now. It can look completely different. Whether it's inflation or the economy, it can look completely different. But right now, Jackson Hole, right? Bova had the best line. We're not like the Dorothy line. We're not in Kansas. We're not in Jackson Hole. Oh no, we're not in Wyoming anymore. Okay, because right here, the Fed threw a tantrum and caused this. Okay. And right, we were all talking about it. Here, you had multiple times where the Fed and Powell could have created this. Cash carry, like a little baby, he was crying, right? And they didn't. And the market sees right through it. You know what I mean? It's obvious to them. The market has been seeing this throughout. The market's seen it since the October lows. And that's why this has happened. And you got to see like corporate bond spreads. I mean, you would think we were in booming times the way they're acting. Do I have one here? I did. I put them on my regular one. I think on my regular Twitter. Look. And that's the thing to keep an eye on. The correlation, the high correlation, when it ends, you're really not in a bear market per se anymore. You may not be in the start of a new bull market, as we like to define it, but when this is not, where are we? I lost it. When you lose that correlation, right? Because right now it's a mirror image of each other. Where'd it go? Whatever. I'm talking about the swaps. When you lose that correlation, you're technically not in bear market mode anymore, because the market is telling you, right, there's less probability of defaults out there. But that's usually a liquidity thing, which is strange. Anybody have any answers on the liquidity front? I'm being honest with you guys. I don't know. I know of people who claim they know, and I hear it from them. But a lot of people are saying because of the what's it called again? The debt. What's that called? What do we have coming up? Debt ceiling. Let me see. Do I have it here? How am I going to find these charts when I want them? Oh no, I didn't even put my thing in there. Oh, but this guy is a good follow. on liquidity. You guys follow this guy from overseas? Where'd he go? This guy. Yeah. How? All right. So look at it. See this? This is what's happened. See that? I got a couple other charts that were pretty cool. Hold on, let me see if I can find them. I think they were from either Bova or who was it from? Let me see. But does anybody have any explanation behind it? You guys, the TGA and all that of the Fed? Oh, here is this it? Oh, look, he got it from that guy across border, whatever it is. I can't find it. Maybe, oh, maybe it's this. Yeah, it's this, right? Oh, the bottom there. Nah, you can't make that out down there, though. You see that? Anyway, there's been a bump up in liquidity, right? You had significant liquidity drain. Here, the story goes like this. QT, quantitative tightening, which was the big burden and fear, right? It's being offset by other things that a lot of people don't even know exist. You know what I mean? And it likely runs into the second quarter. And then, and then we'll play it by ear and see what happens from there. But you guys think it's a coincidence that all of a sudden the more speculative assets came to life right as we had a bump in liquidity? You're nuts. Yeah, Eric, listen, I'm being honest. I'm not even going to pretend to like I understand it or know it. What is that, TGA? Yeah, I don't follow that stuff. They hurt my brain. What's it? The TGA, like the you have the reserves, you have the, what's the TGA? You have the reverse repo. Yellen is funding a certain portion there because of concerns supposedly about the debt ceiling, and that's offsetting QT. Again, you don't listen. If you're like me, you don't even have to understand it, right? You see this happening, and there's going to be that risk appetite out there, and that's what we're seeing, right? Maybe it just gets shorts the cover. Who the hell knows? But whatever it is, look at the AI craze. Is that a coincidence to you? Put it this way, okay? And I'm talking about like even just for myself. A couple months back, I would have laughed if you said, "Are you buying soon?" Honestly, I would have laughed in your face if you told me you were buying soon, or you asked me if I was buying soon. With the Fed rigging the game, there is no way in hell I will ever buy anything like a soon. Anything. It's got no shot. You understand? It's on InstaSell. If the machines sniff it out, they sell this thing on every uptick. If the Fed is rigging the game, they're draining liquidity. But then all of a sudden, you see a bump up in liquidity, and now this, right? Then you get all these highly speculative and heavily shorted names start to see sweeper activity and squeeze. Then you see a name like AI getting bombed. Then ChatBTA stories come out, right? Now soon and BTAI and whatever is catching action. It all lines up with liquidity. BBIA, whatever the symbol is. Again, people think it's like AI is the hot thing. That's why it's got nothing to do with that. You know, if the liquidity is there, they find these things. Without the liquidity there, these things crash and burn and stay dead. They stay dead. It's listen, see here, I'm being honest. I don't have the facts to back it up. I know certain people, they try to make the argument. I think if I'm not mistaken, it's Drunken Miller thinks it's the most important aspect of the game. Liquidity. You know what I mean? It's the most important aspect of the game. Lift down 30%. Oh my God, especially if the Uber had decent numbers. Sheesh, right back down here. Yeah, you can't forecast it. It's impossible. You got to react to it, Matt. You know? You got to react to it. And that's exactly, that's exactly what I'm trying to explain to you. You know, that's exactly how we got to approach it. I know we would like to buy names, now thinking that liquidity is going to find them in 6 months from now. It's not even an educated guess at this point. That's how difficult it is. You have no edge in trying to do that. But again, we're looking at this stuff. You see liquidity line up with sweeper activity, and all of a sudden you get a storyline to light the match behind it. That's a different story. You know what I mean? That's a different story. But you're right. You can't forecast it. You cannot forecast it. It's impossible. But yeah, so that being said, what they do? Earnings, right? Net up a little bit. You look at these things, even with some of the runs they had, well, the runs that my jaw has dropped, was some of the industrials and Europe. And you're spit away from new highs, which boggles my mind. No, I didn't talk about China. And I think this is what you wanted to see, T, right? Like this is what we were talking about. And I think you may be a little early here just because of how crowded it was. But here's where you start looking now, I think. Here's where you start looking. I think twofold. Here's the problem with China, Pete. This is the problem. And again, it's not new. We've discussed this. One, it got too crowded. Okay. Too obvious to everybody. Everybody was crowding. You can't buy it into that. You can't do it. Okay. So now you have to think with that aggressive of crowding in that stuff, that there's got to be at least either lengthy consolidation or a punch in the jaw. Okay, punch in the jaw would be news and you get that violent shakeout. Okay, or you get more of the same here, where a lot of head fakes in different directions. Okay, that's one. Two, I think the other problem with it, if we talk about liquidity, you had a huge influx of liquidity from the PBOC here that set this off. It's going in the other direction right now. And as a matter of fact, that Twitter file I told you about on liquidity, I think had mentioned it recently. I could be wrong. I get them all confused. Hold on. It might have been Goldman, but maybe he mentioned it here. Let's see. Yeah. Is this it? Open market operations. I guess this is a form of it. I think it was Goldman had a cleaner looking thing. global liquidity. This is not it. But that's kind of the problem there now. Whatever, drunken milk. Yeah, this is the same chart here, right? This is the same chart. So I think, listen, be patient, P. Are you're looking for a trade out of it, or you're looking longer term than that, I think, right? Or no? Yeah, a trade, honestly, I think you get weakness. I think you could get a trade out of it. You know what I mean? A snapback trade. Like you got a niner already. Like if it sells, I wouldn't be surprised they buy it up and it snaps back. But for more than just a trade, I think you might be in this for a little bit. You know, so let's see. You know, maybe you get lucky, sweepers start to light it up. You know what I mean? Or maybe even if they start to come in gradually, tip you off. Yeah, the dollar. I didn't even mention that. That's that's the other thing, right? That's probably the biggest factor. And that's my worry about these crowded overseas things is if this starts to push higher, you're going to have instant selling in a lot of those things, right? Yep. Just because the run up they had. So I think you got to be a little careful and a little patient. You know, if they weren't crowded, I wouldn't be as concerned about the downside. But because of how crowded they were, T, what I was talking about earlier, the thing that pisses me off, not pisses me off, has been frustrating to me the most, has been the other side of that trade. And I haven't taken advantage of it at all, not even day trading. I haven't benefited from semis. I'm trying to think. I don't think I played a semi. Oh, I did. I played a little Marvel, but that's about it. I don't nothing big. Oh yeah, CDNS. I remember you talking about that. Like, and you see the moves in some of these things right now. And again, it doesn't look like a new bull market to me. And you gotta understand, it doesn't have to be that clean cut. You know, we could be in a lengthy period, okay, where we're not in a new bull market and the wheels don't come off. You understand? Like nobody is taking that into consideration. You know, that I think that's the pain trade. I really do. You guys don't think so? Yeah, the limbo trade. You know, but here's why. Here's why. The reason why is everybody's paying attention to this. Okay. And everyone's looking for the big move, okay, to participate in everything else. But underneath the hood, okay, you have so many different pockets, sectors, subsectors, forget about names, that look nothing like this. You know what I mean? Nothing like this. You got bull markets starting in stuff. And I told you something very similar started to happen like that coming out of the 2000 bubble pop. But then it wasn't no, it was value too though. But it was the small mid caps that took the lead. You know? But it was value too. That's right. It was value. Shit, it was value. So, like I said, you had something similar happen out of 2000. Okay, right? Well, you remember us looking at that 2000 chart over and over for so many weeks? That's what we're seeing. You know, that's what we're seeing. And there are going to be times where the indexes get punched in the jaw, okay? And you're going to see all the stuff that's strong stuff in names and sectors, they're going to come down too, okay? But that's going to be an entry on a lot of those things. You understand? So what I'm getting at, and I can't put into words because I'm gaga, is you have a market that is, could be in a downtrend, right? Doing this, but you have stocks that are doing this, right? And what happens is when the market gets hit, those names come in, okay? And then the market bottoms and they go out, make another local high, right? And then back. Yeah, and that's what I'm saying. That's the big takeaway for us, try to forget about the generational lows, right? We're only what, 15% off the highs, for Christ's sake. And forget about the start of a new bull market, and just we all wanted to be traders. That's why we're in this game. Find names and trade them, right? Okay, your best entries on all the names that are catching action is off weakness. The more you can be patient and wait for weakness, the better the results on your trading. It's that simple. It's that simple. Again, not every trade's going to be a winner, but you're going to win more than you lose, and you're in a bear market, or even better, a market that's range bound. Yeah, I just, no market is the same. I mean, we're dealing with a whole new, right? This is, again, you talk to anybody who's been in this game. We never, coming out of COVID, the Fed throwing in the kitchen sink, now the Fed trying to unwind and kill inflation. This is all new stuff. So as much as I say it can remind me of 2000, or you got people talking about 1929, 2008, only the market gods know how this is going to end up. Okay, but the likelihood is when this phase is over, okay, you're going to have capitulation. May not all come at once off an event, but you're going to have where the crowd is thrown in the towel, and we're not there yet. As a matter of fact, I don't even think we're close yet. I mean, you get a bump up in liquidity. Look at what we're seeing right now. Okay, Tesla traded like 5 million contracts today, right? So however it comes, whether it's through a crash or a drawn out process, it's going to come. It's going to come. And then we could talk about the start of a new bull market. Hey, they scare me. They scare me. I'm telling you, these options, they scared me. I'm not even saying it now, being in a bear market. On the way up, they scared me even more, worrying about the other side of that. Like nobody thinks of it when the market's ripping and Tesla's going parabolic, and we're seeing $1 million call sweepers one after the other. It's all fine and dandy when we're going up. But if that ever happens on the way down, I don't know what that looks like. It did, you're right. But I'm talking about as the whole market here, You're right, though. It did. You're 100% right. Yeah, this was a disaster. I mean, look at this. This was the complete opposite, right? Like we said, of this. Same thing, just the opposite side. Look. Whoop, whoop. So if history, I mean, listen, there's no other way this resolves. Okay, the only way it resolves is by all this crazy shit coming to an end. Okay, it could come through an end from one big bang, and everybody's decimated, and the whole market trades in hockey stick formation. Okay, or it can be a long, lengthy, drawn out pain in the ass that frustrates the living daylights out of everybody very easily. Very easily. So, but like I said, we don't want to get too wrapped up in that. Okay, that's what, leave it to Twitter. Let them talk about all, you know what I mean? Because the way it plays out in the market is in slow motion. Slow motion. Over 16,000. Oh, the NYA. Right. Yeah, he said that would be a bullish sign, right? How about his 4,200's been money? No, Pete? Unbelievable. And I don't think he even meant it like 4,200 bullish above, bearish below. I think he meant it as far as sentiment for us. You're a seller above 4,200. Yeah, exactly. As opposed to just a level where it's make or break or something like that. But yeah, Harnet's been money. By the way, Harnett note tonight. We'll see what he says. I don't think he's going to have anything new to say. He's pretty much been singing the same tune, and nothing has changed here. Nothing has changed. But guys, the most important thing to stress, all right, again, I like where we're at, because if you guys remember, I'm not going to lie to you, when we were talking about individual names, even before October, I know a lot of you were looking at me like, what is he talking about? Can you please stop with the action and individual names? I know a lot of you were thinking that. Don't bullshit me. I know, but I'm saying at the time, even when I'm saying it, I was like, oh my God, they probably think I'm nuts and I'm leading them on, So, but, I'm happy that it's here. So we all see it and we know, it's proof of it. But like, that's the playbook. Okay. And until we see something break, you know what I mean? That's it. We can't make it any more, put it into more simpler terms than that. Unless we see the things we look at them every day. Every day, they mean nothing. But the reason we look at that stuff every day, the credit default swaps, all that stuff, is because to keep our eyeballs on it, not get distracted from it. When we see signs that either something's breaking or the Fed is starting to rig the game again, that's where the current playbook, the individual names, we got to put on pause. You understand? Yeah, I don't see. That's what, like, new bull market talk. That's not around in a new bull market. You understand? You don't get the crap performing. Doesn't work that way. New bull market gives birth to new leaders. You understand? That's always been the case. Always. You don't get the junk squeezing hard. And guys, look at the names. Like, give me any name. Look at these names. Like, even AI, with all the AI hype. Look at this, right? This looks like, oh my God, look at the stock. It went from 10 to 30. Look at it. Okay? This is not, I mean, look at it. But look. You understand? Usually, I told you, in bear markets, usually you see multiples of this, right? Like, look, you saw a little one here. Look what it looks like back there. You can't even make it out on the chart. Look at them. You know, this is not new bull market stuff. You know, this is, again, this is more of just range bound. These are heavily shorted stuff squeezing, and you got stuff that just, you have a weird sweet spot right now in the economy where you see they re-rated a lot of stuff thinking the economy, the wheels were going to come off. And when the market realized like the wheels weren't coming off, they started to buy up all these names aggressively, you know, like, oh shit, we have more time. And now listen to this. Not only did they think they had, you know, 2 quarters of breathing room and stock got undervalued because it sold off too much, you might get like, you get a bump up in the economy here, next quarter earnings, you might get some beats, you know what I mean? Instead of complete deterioration. You know, and that's what I think the market was looking through in a lot of the earnings that were bad, right? The worst, some of the bad earnings, the stock went up more so than anything. I think that's the market looking past this quarter because, you know, you got PMIs, they bottomed out, they're curling a little bit. I'm telling you, the risk right now, okay, I think the market cares the most about, and it always did, but you know, you have the economy worsening and rates and all that, inflation, right? That's what I'm saying. Like the CPI comes in hot next week, that can derail the sweet spot. That retail stock that puked the other day was a bit scary. Seemed to come out of nowhere. Which one was that retail stock? Oh, retailer. I thought you meant retail like riffraff. Oh, CPRI, right? Wow. Look at that. Jesus, you're right. It was doing well. Look at that. Yeah, this is cores. Jesus. What a run, though, right? What a move. Yeah. So, and let me end this with on an optimistic note, okay? Because even like Sahil said, yeah, you sound more bullish than usual. It's not even bullish. I'm not bullish, as many of you know, on the market or the economy. You could probably sense more excitement because there are more things to do, right? Right. The Fed's not rigging the game. That's what I'm bullish on. But if we do get a pullback across the board, where we get that high correlation, we haven't had it yet. Okay, we've had chop, upward bias chop, right? When we do if we get this that I was talking about earlier, okay, the names that will catch the action and be set up off of that, that's where that's where you're going to make the money. You know what I'm saying? Like that's where the decent entries come over. Like here, the entries get tougher and tougher as the market pushes higher, right? Because everything is up at niners. We see niners all over the place, right? But when you get that high correlated pull, wherever it goes, wherever it stops, when they start finding names off of this dip, you know, that's where the opportunity is. It's not in the overall market. You know, the overall market may not even bounce much. It may die there. Who knows? But it's the names that see the action where the opportunity is. Yeah, I think Kevin, that was interesting, right? That the names that had worse earnings did better than the ones who did better, right? I think what happened was they were looking at it kind of the way we were looking at it. Like if you remember coming into earnings season, what we wanted to see was bad earnings, buy the weakness. Bad earnings, buy the weakness. Like that was our playbook coming into the start of earnings season. Okay. The market always front runs a good setup that you have, always. And what they did was, instead of giving us the opportunity to buy those bad earnings, they just bought it up in after hours. Okay. It started, if you guys remember, I don't know if you remember, like Boeing or Caterpillar. Who was the other one? There was a big tech. Was it Meta? It was one of them. They were all down, and then whoop, like the weakness didn't last 5 minutes. Like Boeing, I don't even know where's earnings on here. Right here, look. Here's earnings. You know, so went down and they just gobbled it right back up. So it's like the market had the same playbook. Any weakness was an opportunity. Why? Because they sort of were looking past any reason they had to sell. You understand? They were looking through this quarter, thinking that next quarter they could get a bump. That was the outlook. Discover. Oh, was that the reversal? There was one even. You just refreshed my memory too. Yeah. Look at this. Capital One. That's the other one. Look at this. Ooh. Right here, right? Where is it? Can't even see it, the weakness on these things. What? Oh, this. Look at this. Holy moly. This thing was down like $3 off the open, off earnings, and look what it ended up closing. Yeah, all of them. Not all of them. You know, you had some names that really shit the bed that have serious problems that probably didn't get, but I think even like garbage like this, didn't this get yeah, we day traded this, right? When was earnings? Here. Gap down, and there it is again. Bink. Right? Yep. Intel too. I haven't even paid attention to Intel. I remember it was down off earnings. Where's Intel? Oh, here. And then they bought it up, right? Yep. Bill, it's funny you mentioned this Bill, because I really like this name. I made some nice money on this name as a trade when the growth names were hot. The problem now is it's just, you talk about high multiple. This thing is trading at like crazy, right? But you got that play here, right? If again, we're in the same backdrop, same regime, without the Fed rigging the game, this thing probably catches a bit. Again, I don't know what the earnings were. You know what I mean? I don't know. I don't know what was said, what was it, but again, just in general, these type of names, there's probably going to be some buying there if we're in this type of regime. Because it's down significantly. And Bill is, again, I use the word real with quotations on it. It's not a penny stock EV. This Bill is a high growth name. This thing had promise. Like, look at this move. It's just a bad, it's not the environment for it, man. It's not the environment for it. Yeah. Again, real. What's real? Like Twilio, is a real company. I can't believe what they did to it. But you get into these type of bear market environments, it doesn't matter. I told you guys, I've seen blue chip be taken to the knees, Bill, they lost 40 cents. Kevin, they made money. Oh, I think it was the guidance, right? That was bad. I think it was the guidance. Yeah, 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 yeah. I think it was the guidance. Wow. So they did turn a profit though. See, Kevin, what I would say, like, if and when growth was hot, this thing caught nice sweeper activity. But if you saw a nice sweep in this, just confirmation that somebody sees what you see, um, you're at the floor there where it'd be worth a look for a trade. For a bounce, I don't know what you want to do. Are you holding it longer term? Are you talking about longer term? Yeah, yeah. Some out of the money stuff. I mean, I'm just curious to see if these growth names. What I would like to see is the meme stocks and all the crap of the crap die, and names like Bill find buyers. You know what I mean? Like that's what I would like to see. Like names like Bill, you know, even though they trade in that hockey stick formation, you got room, right? You're at the bottom end of the range here, 90. You know, look at all this room here. It is interesting. I like this name though. I like this name. Again, I liked it, when growth was in vogue. But this is an interesting name. Some of these stocks really got whacked though. Whacked. But yeah, I like these names. I don't like the names. You guys know the crap of the crap. I don't like the ENPH has been moving around like crazy the last few days. They have earnings. Yeah. Talk about range. Look at them. This is a wide range. Yeah. This thing moves big, right? This thing moves around a lot. It's a better spot down here, though. If it catches action, definitely a better spot down here. A lot better than stuff I've been looking at. Everything I see is up. Everything I'm looking at, everything I have a little interest in looks like up there. Everything. Solar got whacked, right? This thing is still strong. Look at this, though. Look at this move. The other ones got whacked. Yeah. I guess it's on a stock by stock basis, right? Some are better than the others. I really don't have, I'm nothing, unfortunately, nothing that even interests me here. Oh, you know what we were talking about today? That I was kind of hoping for. I want a nice spec uranium play that catches sweeper activity. I told you guys earlier, I want a uranium play that only me, sweepers, and you guys know about. That's it. I want the soon of uranium. That's what I want. Yeah, 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 exactly, Cash. That's what I want. Yeah, this is what exactly. That's why I typed it up. This and the CCJ caught some recent action. Yep. You have earnings coming up here. I don't know if it matters, right? It doesn't matter for these uranium companies, I don't think. Oh, there isn't anyone in particular. I was just looking at this and CCJ P, but I'm saying I would like to see sweeper activity in one. You know what I mean? I would like to come in tomorrow and something like nuke, right? Nuke, ticker symbol nuke, catches unusual sweeper activity, trading at $1.90. And like soon, I would buy some without a doubt. I haven't bought the UUUU yet, but we'll see if if the flow pushes me into it. Maybe after earnings, or maybe after earnings, I'll look at it. But this is like one of the subsectors that a bit interested in. Again, because it's not really tied to the market or any, you know what I mean? It's in its own world. And especially if yeah, that's the ETF, right? Yeah, I like the consolidation there. I don't know. They look interesting to me. In the CCJ, there's been flowing this for a long, long time. They love this stock. This looks good. It's just ripped recently here. Had earnings today, so that's gone. That's good. Yeah, definitely could be their time again. Definitely could be their time again. This moves with memes, the CCJ. Really? I didn't even notice that. I didn't even notice that. There was another one too. There were a couple. Like I know from playing them when uranium was hot. Remember they were catching all the action. NXE. And there was another little one. It's with a U. No, not you said something like that. No, that's not. Oh yeah, UEC. There you go. Thank you. All right, that's the little guy. Look at it. That's the little guy. Market kitchen on the nuclear, a significant part of energy future. Yeah, and there's something going on big with it. There was a whole write up on Bloomberg too. I don't know, shortage or whatever. Uranium's one of Tim Carson's favorite energy plays. DNN, yeah, DNN. That is a meme stock. I remember, right? This was a meme stock. I remember this guy. I think I had played this too, DNN. But let's see, right? Let's see. I want to see some sweeper activity just to confirm it, what I'm looking at. And but as far as action already, you guys are right. This UUU and CCJ were the two that caught some flow. Oh, this is the shortage. Oh, okay. That's the link. Can I pull it up? Oh, there we go. What the? Get this off here. Yeah, here's this uranium stuff here, huh? Yeah, so I want to see some sweeper activity, but that's kind of like what I'm looking for now, just because everything until we get a pull and things loosen up. CCJ. Well, I'm not going to bet CCJ now here anyway. I would like to find one that's people don't know about. I want something again like soon, dead, and I'm betting it's going to come to life. You understand? Like that. That's what I like. I don't like buying stuff that's alive already. It's just harder to manage your risk that way. So, yeah, soon was just it lined up too perfect. Too perfect. And that whole AI thing lined up perfect. Even AI could have been played. Yeah, see, find a couple symbols, Eric, and especially if they trade options, we'll keep an eye out because a lot of times things get sweeps we don't even know. Because I remember this name touching all that action. I think their energy, I still don't know. Look at that. Oh, this is coming in nice too now. But look at this run. Like all that time catching sweeper activity, I still don't know what they do. 9. Yeah, bloomers. I love it. Poop your bloomers. They have earnings. They have earnings. Otherwise, been catching some nice action. This BLMN. This is a retail name. They have earnings on February 16th. See, this is another name, right? Decent action, but earnings. You know, Toast March puts. Yep. There's been some put buying in quite a few things. Now, this reported already? Oh, no, not yet. February 16th. Yep. Like it feels right. We got it almost feels like earnings season's over, and there's still so many of the underbelly haven't reported yet, you know? What do you guys like? See, I like the semis because I think like I don't even think they covered much of that short. They covered, but they didn't cover a lot of that short position on the semis as a whole. But how could you get long these things here now? Telling you this is the group that frustrates the living daylights out of me right now. Yeah, T. I don't know what to do with them. All of them, right? Ooh, look at this, man. So annoying. This is still in Chop City a little bit. LRCX, I looked at that. Like that's the one too. ADI, look at ADI. Yeah, they all look decent. Yeah, they all look decent. But they've come a long way, right? It's like now, what do they? I mean, they break out and run to new highs. You know what I mean, T? Like, what do they do? They run? What do you? I don't. But I like them because usually the semis they get hot and they get crowded. You know, like the semis are the alpha group. Yeah, yeah. Even this thing was laying on the ground dead. Look at this. Soxel. God, this thing was a cash register. Oh, that speaking of cars, right? That was another one that had a big move recently here. NXPI. But this trade may not be dead. You know, they can breathe a little bit and maybe look good again. You know, some of these things are starting to breathe a little bit. They're just tough to buy, you know, right here into a niner. You know, it's kind of like over here, but even worse, I think, here. Right? And then you get caught in something like this. Oh no, that because of the type of market we've been in, those ratio charts I like to look at. So I'll give you an example. This I was looking at because they are, yeah, because they hedge funds were aggressively short semis and aggressively long China. You know what I mean? So you can see here, that is the reason why they were positioned like that. And here's the unwind, you know? But that's the type of market we're in right now, you know? The ratio charts, that you know, you can see the trade better. Semis, there's no better groups, you know. There's no better group when risk on. If you're in a bull market, and you know what I mean, you want like a legitimate group, right? To make your money. The semis are always the place to go. Always, always. God forbid you time a breakout in the semis right, and you can hang on to it. It can make you in this game. You know what I mean? You know, like Nvidia you're talking about, or an LRCX. I remember kicking myself. I played LRCX coming out of late 2018, the last time Powell was trying to tighten things up. I'll show you where. The semis were a disaster. Look, you know why? China, trade war, Trump. This was China trade war with Trump. These things were a disaster. And then they started to catch flow. The first group that started to catch flow off the lows in 2019. Oh, God. T, I don't even watch the news anymore. Like there's nothing going on since that guy's out of office. I used to watch like CNN. I don't even watch it anymore. Oh, it was like landmines for the market. So look at this. And then I bought a little, I think it was post earnings. So it was over here. And then got out, and then look at the move. So that's what I mean. Like if you happen to catch that entry and you hold, look at this. Talk about being made. What a rip. Semis are unbelievable. You know, or you find an underbelly semi that nobody knows about. Remember this guy? What happened? Oh, thought it got bought out or something. Look. No, this one. My buddy still has a position. He won't sell it. Look at this. That's how I found out about this stock. My buddy calls it baby Nvidia. You believe it's at new highs? Look at this. He hasn't sold one share. He's held through all this. He loves it. Loves it. Baby Nvidia, he called it. His average cost, I think, is like single digits. How about that? Got a horseshoe up his ass with this thing. Horseshoe up his ass. Which one? AE? Oh yeah, this is the one T brought up a couple times. Right, Trey? You brought this up a couple times. This is the one? AEHR, I think. Yeah. That's a rip and a half. Oh, I know that. HIMX. That's been around a while. Yeah, me too, T. What do I hold? Like I'm telling you, I'm trying to get myself to play more because I've been so gun shy to buy. Forget about holding. I put my bloomers in seconds. I gotta like staple my hands to the seat if I'm in something that I hold. I've been a little better at it intraday anyway, the last few times. And soon I held pretty decently. You kidding me? You guys were shocked that I told you I was still in soon the next day, right? You guys, you're like, what? Yeah, I have the complete opposite. But I'm telling you, that's my problem when in bear markets, being disciplined is not my problem. But then when I need to buy and try to make some money, I'm gun shy, you know? So I'm trying to work on it now to loosen up the gears a little bit. Yeah, definitely sell too early. Definitely. That's a major problem. Major problem. But that's, you know, when we get to that point and you start to see a sector breaking out. See, the thing is when you have a decent entry, you can hold because it's profits you're giving back. You know what I mean? When you chase, it's not that easy to hold because, you know, one pullback, boom, you're finished. Like I give you an example, like soon, okay? The entry, right, at $1.60, you never had to stress it, right? So you could always, you can play, all right, if it comes here, I'll pull the plug, or, you know what I mean? You got a lot of options open when you have a nice entry. You know, you buy soon at $4, forget it. $1.64. Yeah. I mean, T, a lot of people, you know, I can't blame you either. I told you, the only reason I held it is because that was my plan ahead of time. You know, I said I never have a dollar AI stock with action again. You know, it was just a sweet spot entry. Look where we bought it. You know what I mean? Look at this. You know, so they don't always line up like that. Catching momentum right there. Yeah, I know quite a few of you played it a few times. Yeah. Exactly. That's why the AI itself, that was the first one, and it caught real action. You know what I mean? That was the one we should have all had and even held for a couple of days. Let it go. This was easy money. This was just explosion every day, right? Now it'll be interesting because now what they'll likely thoughts around here. And then depending on the market, they might all bloop. I don't know. I think the next thing, what they usually do is it's going to trade here, all right? And it's going to fake out everybody. People are going to short it thinking the run's over. And then you're going to see these big squeezes looking like it's ready to break. And it flags, you know? Kind of goes into like consolidation like that. And then eventually it'll decide what to do after that. But I think this, you know, tell me what the liquidity is going to be like, and I'll tell you whether these things go higher or lower. How about that? You know what I mean? I think that's what it all comes down to. That's what it all comes down to. I don't think it has anything to do with AI. I don't think it has anything to do with AI. With these things. I think this theme it sprouted up at the perfect time. You know, if this happened last year in the summer, these things wouldn't have got out of their own way. Yeah, which is probably feeling shorts already. You're 100% right. Guys, this has been going on since I'm in the game. This type of shit's been going on constantly. You got right with the crypto. We've seen it with the crypto. I've seen it with solar stocks. I've seen it with Chinese internet stocks. I've seen it with terrorist stocks off 9/11. If you guys were around post 9/11, you remember that. Every bomb detector or face recognition, whatever was tied to terrorism was going ballistic. And we were, every time a stock came, oh, look, they do this. Oh, they find, and let me see if it's still around. How about that? It might be still around. I think it's an Israeli bomb detector. Oh, it's not around. MAGS, MAGS. But same shit. I'm telling you, you name it. When oil got hot, there was a pocket of oil, certain oil stocks that did it. Solar stocks were one of the hottest runs I've ever seen when they got hot. Kind of like AI. Now, wireless stocks, since I got in the game, I kid you not, it's been going on. And what's interesting is it's not like it's flash in the pan. The technology is exciting and it's going to be around. It's going to be a big thing in the future. It's just these things just don't rally all the way through it. You know what I mean? Like solar. Okay. Solar got hot when oil was ripping. When was that? 2007? When did oil have that huge run to over 100 the last time? before it crashed. I think it was 2007, right? So it was, let's say 2006-ish might have been when the solar stocks went bananas. Anything tied to solar, every little shit company that was affiliated with solar in any way. I remember there was a stock hedge funds loaded up on. I think it was Soon. Do you guys remember Soon? S-U-N-E? Oh, if McBob was around, he'd remember it. But anyway, they yeah, Goldman had crazy targets. That was the craziest sector. Later, Jim, that was the craziest momentum subsector move I've ever seen in solar. They went nuts. Nuts. But so again, it's not that the idea of the technology is not for real. It's just that excitement, liquidity plays a part, and then dies out, and they heat up from time to time. Kramer yesterday said no to you. Oh, then it's a lock to you, right? He's been on fire, reverse psychology wise. You know what it is? It's bothering him, and you can tell it's bothering him, and it gets worse. Jesus Christ! Everything he mentions. That should concern us because he's calling this a new bull market, by the way. Right? I heard him say it the other day. I got chills. Yeah, he's been unbelievable. I feel bad for him at times, and then he irritates me, and then I don't feel bad for him, The red kids. I know. There's an ETF. Isn't there an ETF they made? I saw he got pissed off. Yeah, he's had some doozies. And listen, he makes a lot of calls, so he's going to have some really, really bad ones. But the worst one was the Bear Stearns one. He caught so much heat. I didn't think he was going to survive. He literally told on his show, he was like, "What do you think? Bear Stearns is going to go out of business or something? They never go out of business. You guys are crazy. Don't listen to those clowns." And they literally went out of business like a week later. They went out. The kiss of death. All right, guys, listen. The end of the week is here. We got Hartnett later tonight. Let's see if he has anything interesting to say. But the CPI next week, I know everybody gasses up these events, but if that's a hot CPI, we may have some short-term headaches, but those headaches will lead to opportunities. You know what I mean? So let's be selective and picky in the meantime, and we'll see. Things will loosen up. We'll know. All right. Thank you, guys. Always a pleasure. Enjoy the rest of the night and the weekend. If I don't speak to you mañana, but I'll see the most of you tomorrow. Awesome, Praveen. Thanks, everybody. Have a good night.